Hi, hello there. Thank you for joining me. It's been awesome week. I hope you have enjoyed your week. And this is Lubosi Stocks. And before I go on, I would love to thank you so much for your feedback. Thank you so much for watching this video. Thank you to my mentors, Robert Kiyosaki, who wrote the book Rich Dad Poor Dad, which you can get on Amazon. Timothy Sykes, who wrote the penny stock, the forward to the penny stock guide, which you can get on Amazon, and Matthew Creator, who wrote the Rocket Stocks, which you can also get on Amazon. And thank you to H Potter for on TradingView community who created this indicator. H Potter, thank you so much for creating this indicator, which I've been using. Now, I would also love to thank TradingView for the awesome software and support which I use to scan for these stocks. Now, if you've watched my previous video, I think I showed you how to scan for stocks. So please watch my previous videos to understand how I found these stocks here. So basically, I clicked this fire button right here, and I screened for them, and I picked the best ones that I could find and use as an example. So the first one that I found was AMC. Now the day that we found AMC, it was $8.33. That was the time I did find it was a good short at that time. And today it has actually crashed. So basically, we're reviewing the time we bought AMC, the time we analyzed AMC. That's what we are doing. And I want you to notice that at that time we analyzed AMC, the ADX was around 39. So you had all this time. So remember, the key level of the ADX ideally should be 30. All right. You need to be safe. So at least it should be 30 and it should be uptrending. Now, I want to show you something that really helped me drill down on this strategy, and it was Barrick Gold. And this is what really helped me drill down. So if you've noticed, it's reaching 23.24, and if you read my previous article, it says the key level is 25. Right now, ADX is at 24.6. So Barrick Gold is also a very good example of how to use the rocket booster strategy. Another example is MTNS. Now, you need to be careful when the ADX crosses above the DI. This is not a good time to enter a trade. So the best time to enter this trade should have been here. Now I'm using the numbers here. You can see this blue number here. It says ADX. This green one says DI plus, red one DI negative. So that's what I'm using to accurately pinpoint the best buying position. Okay, so you can see it says 33. All right, so I'm using this right here. This is what I'm using to see. So at that level here, if you notice, it says 33, and that was a perfect time to enter. Right now, you do not enter. This is called an oversold market. Okay, so when it crosses this ADX, right, then you do not enter. This is a bad entry. So basically, what I'm doing is showing you a good entry on the rocket booster strategy. Now, if you look at this one, this is a terrible example, very terrible example, because there is no 50-day moving average. As you can see, it just has a 200-day moving average. So even though it does appear to be a good buy, there is only a 200-day moving average, right? That's why the color is blue, and this is called a middle market. So this is a bad stock to enter. And then finally, oh, not finally, sorry, we're going to look at this one here. And as you can see, it's on level 38, which is very, very good entry. If you're buying it as an option, it's probably $1, or depending with your management, your risk management. But this is a $15 stock. Again, I found them by coming here. If you watched my previous video, and it took me about 30 minutes to scan for you. So I scanned the percent chain, the percent gainers, the percent losers, and the volume gainers. So I did the scanning for you. And if you want to see me doing it live, I think you should check out, I think, my two previous videos where I do it live. And probably I'll try and do it live, hopefully next time. If I get more likes and more rocket boosts for this, I will scan these stocks live for you. And this is also another good example. The ADX is 32 here. Now, if you noticed, I'm kind of using these two just to get like an average feel, right? So this one is more of like an average of this one. This one is 1414, and then this one is 1320. Okay, so yeah, the one below is more of like an average of this one on top. Okay, so the ATX is smoothing at 14, and the DI length is smoothed over 14 days. For this one, this is more of like an average where the length of the index is smoothed over 13 days, and the length of the DIs is over 20 days. So it's kind of a little bit imbalanced, right? The person who created this created this indicator, adjusted it according to their risk level. So basically, it's just an average of this one here. Okay, so you can see the ADX here is 32. So ideally, you want it to be above 25. So the ADX is that big blue line there, and then the trend is represented by the DI minus and the DI plus. So always remember that. And I picked this one here as well to show you the perfect entry example, which is here. Again, if you look at the ADX, it's probably 27. Here it shows 27. Okay, it shows 27 on that ADX there, and then on the ADX below, and then on ADX, then on the DMI above, it shows 25.6. Here, 25.6. Right here. This is where I'm seeing it. Okay. Here it shows 25.6, and here it also shows another number. So take note of those numbers here. It says 27 here, 27.9. Yeah, it's the ADX here. So take note of that. 27.92, and you have 25.6. So that was a good entry. That's why I put that there. And then we look at this one here. Now, this one, it just piqued my attention because if you notice, the ADX is at 22 on the above, and then on average, it's 24.5. So it's almost there. It's almost there, but it's not very powerful. So I personally would not trade it, but I think it's a good one to watch. Just to give you an idea of the feel. And then this is probably the best out of all these stocks. This is the best one. It's one of the best ones I found. But again, there was a little bit of a mismatch at the top here. So basically, if I remove this one using my indicator, all right. So again, these things, they are really not perfect, you guys. But using my indicator, it's perfect, right? So that's why I chose it. I mean, this is, if this was the epiphany, like, this is the perfect one. And then finally, I want to talk to you about the gold price. Okay, and then these are just other stocks that I've been scanning using another system, my own personal systems. And don't worry about that for now. Just focus on this one that I'm showing you. I do know about. I think I know about. I have, apart from this one that I'm showing you, I think I have about two other, approximately three other systems that I have been studying, tested, and refined. So those are the three systems that are more way advanced, and I don't share those systems because they're very, very risky and very advanced. But this one is, even though it is advanced, it is something that I believe you understand and you will make it. So this is probably the best out of all of them. I found it. I think I found LNZA. I think I found it on percentage. I think percent change losses. Yeah, this is where I found it. I found it here. It's a $4 stock. This is where I found it, and I think it's the winner. Now I want to talk about finally, just to end the video. I want to talk to you about the gold price. Now I think I did recommend buying gold at this level, this black line level here. Now the system that you use determines whether it is a good buy or not. So using the ADX, excuse me. Now using the ADX, I want to show you something. Now using the ADX system, okay, though I do not love going back into you know the past, but if you are using the ADX system, probably the best time to buy, or it would have indicated you may be around here. So what you need to understand is these systems, that they are correlated, even though they may not give you the same results, but there is a certain correlation. But again, I do not want to confuse you, but I just want to talk about the price of gold because I think you can learn something from this system here. Now the best time to buy gold was here. I think the last time I saw the indicator was somewhere here or there, one of those two. So right now what has happened is it has dropped by 5%. Now the this is an example of risk in whatever strategy and system you decide to use. Always remember that there is risk. And this drop is about 5% from the entry. So think about this. There is a system that is used to buy gold, right? Now in this system there was a flaw, and that flaw has caused the price of gold to drop by 5%. So this should give you an idea of how risk is, and to let you know that whatever system you are using to buy, or excuse me, whatever system you're using to buy or sell, there will always be a risk. All right, so you really need to prepare for that risk. That's why gold is very much advised not to buy it on margin, because even if the price goes up or down, you still have the metal, right? You're advised to usually to buy the physical metal, right? But this drop of 5% kind of gives you an idea of risk management. Again, I'm not saying gold is a bad buy. Now, most experts out there, they will actually tell you when it drops like this, it's actually an opportunity to buy again. And then maybe let me see what we can do here. Let's clear this list. I'm thinking of showing you something else. Before we go, I'll show you the government 2-year government bond. So, basically, the way it is I know this is kind of stretching the video out, but I want you to understand this. This is very very important for you to understand the correlation between gold and the bond market. So basically, there's a correlation between bonds and the Fed rate. Okay, you need to understand this. Now, I know in a previous video I said I was not going to spoon feed you about risk management, but hey, I decided why not? Let me take a crack at it, and let's see if I could show you risk management. If I could teach you risk management. Now, risk management is a little bit advanced, but hey, we can still talk about it. There's no pressure. So basically, the way risk management is about economics. Okay, so basically, what it is that when the Federal Reserve Bank pauses rates, like it did here in 2006, a market crash happens. Now, this means the Federal Reserve stops monetizing the printing of money. And then when they stop monetizing the currency, we have a recession. Okay, because if they stop monetizing the currency, this drops down the value of that currency. Okay, and then this causes inflation, means free money, cheap money, and this builds up to a recession of high food prices. So whenever this happens, people stop saving money. The bank stops giving you interest because this is when they monetize their currency, and then they give you a return on your savings in the bank. So they monetize the currency, give you a return on the savings in the bank. I don't know how much time we have left. I think we have like two more minutes. I don't know. I'm trying to see if I can draw it. I'm trying to see if I can draw it for you. Basically, what's happening here is okay. Let's see if I can draw it for you. I have about 2 more minutes on this recording. Oh my goodness, I have 1 more minute. All right. If it doesn't work out, maybe I'll do it in the next video. Okay. Let's see if I can. And please read the disclaimer below this video in case it cuts me out. Please read the disclaimer. Do not buy what I tell you to buy. Do not sell what I tell you to sell. So in case the video cuts while I'm explaining, that's my disclaimer. So basically, this is what happens, you guys. So they print the money, okay? They print. P will stand for print. And then this money printing has to be monetized, okay? So when they monetize, this is what gives the individual savings in the bank. So when they stop printing, then when they stop monetizing this money printing, it means they stop giving you interest on your savings in the bank. And when they stop giving you interest on your savings, this is what it means. And this is what causes people to save bonds. And that's why the bond price keeps going up. I want to thank you so much for watching. Do not buy what I tell you to buy. Do not sell what I tell you to sell. Do your own research before you buy or sell anything. Take care. Bye bye.